Right, welcome everyone. We are back live with our 8 a.m. Morning session with Doc every Tuesday and Thursday. So today we're going to go over the SPX plan and some of the things that are happening today. Before we do that, as always, let me share our disclaimer for a few moments. All right, Doc, I'll pass it on to you. I'll share your screen as well.
Okay, great. Good morning, everybody. And here's doing the SPX roadmap game plan for today, and look at some other names while we're at it. Sorry, I'm a little late. I was going down some geeky quantity rabbit holes and kind of got lost for time. Otherwise, I would tend to have a little more prepared. That said, okay, a quick review of yesterday. Yesterday was pretty much a range day, a trend day where we opened, went down, tested. Where was it? Let me just bring this time frame out. Where we had two large structures, one at 6,000 and one at 6050 put structures and call structures. We went down and almost tested the low of the put structures down here. And then once that didn't break, Charm Decay plus bullish flow plus Nvidia saving the day after the Google CapEx pulled us up toward that 60-50 strike. And at the end of the day, I guess there was enough interest in that 60-50 strike that we broke through that 60-50-55 cluster, ended up going through it, closed at 60-60 near the high of the day. And now the overnight session, we kind of bounced around the 20-point range. And here we are at the top of the range of the overnight session ish. We're kind of right at an inflection point for today. Now, today, again, we have a structure right above the 60-75. We have 60-80-85 structure. You can't see it here. That'll be updated. Fabio will show you later. I'll show you where we have updated gamma levels later in the day. And I'm sure that'll show up the 80-85 structure. And so that's the first magnet line in the sand support resistance level. And if we can't get through that, then we could start chopping around and heading down toward the 60-60 open level, close of the day. And then this level might get magnetic down here where the 60-35 puts are, especially if we break the 60-50-40-ish level, 45, then, and especially if IV increases. And IV to me seems a little low with the non-farm payrolls coming tomorrow. So while it's looking like we're going up and there's a lot of OI at 6,100, and that could be magnetic should we get through that, my assumption is that customers are long calls, right tail risk bet, and that could pull us up. Market makers hedge in that direction, all things being equal. I'm not going to go into all the other Greeks and how they dance together. At the same time, if this upward move should fail, then we could end up seeing a red day here. And 60-50 round number, mental pivot number, and then maybe, head down toward here. I don't expect the put structure to break, but it could. Yesterday, I didn't expect the call structure to break, but it did. So that's kind of my back of the envelope thinking as I was looking at the structure this morning. Now, I'll go through some of the. I always like to go through the Mag 7 or Mag 10 or Mag whoever they are names. Apple, after their earnings overreaction, I think that was calls going ITM, that the market makers had a hedge and buy the underlying customer loan calls that, and then we got that reversal, and then we had some bad news, some China news, whatever, and now we're kind of trying to establish a new level. And for the overall market strength, we want to see this put support level, this 27 and a half, 30 level hold would be indicative of market, of some kind of market strength. I'll go through the rest of the mag names and I'll kind of go back around to a few other things. So we have Google. Let's find Google here. We have Google. Everybody knows Google got beat up yesterday. And the same thing happened with Google in the opposite direction. Google exceeded the expected move to the downside, so hedging had to sell in the direction of the move. And so we've kind of, in theory, overshot to the downside. So I'm expecting that maybe once Friday or Feb OPEX clears out, then we could get a clearer picture of where Google might be going. And then depending on time constraints, I'll look at the mental Q dashboard on the website and see if we can get a more granular picture of that. I'm just kind of, going through things broadly right now. Google. Oh, I left out Amazon. How could I leave out Amazon? Amazon hanging pretty tough into earnings tonight. Um, I didn't look at what the expected move for earnings tonight is. Um, So, like I said before, rule of thumb, if we exceed the expected move by you know, by somewhat, then typically we get the outside move to the upside. If we exceed it to the downside, we get the exaggerated move to the downside, and then we get to recalibrate. As a case in point, recently, and this is my theory, I don't know if there's any official studies that I've read or whatever, but just what happened with PLTR, if we overshot the expected move. We went up here to 105, and now we're coming in here, this 100 level, and I expect, don't know, that after Feb OPEX, we kind of, once whatever calls and puts, are near the money, that we retrace back down in here. I've seen this movie before. I don't know. This is just kind of an example. Going out on a limb here. Okay, let's go with NVIDIA, the mother of all things good in the stock market. And NVIDIA continues on its ascent. Google CapEx spend was 75 billion or whatever. So that was bad news for Google, good news um, for NVIDIA and that hardware data center trades. And so NVIDIA just kind of sliced through all these levels, and 130 is kind of clearly the next target. That's kind of where we're going, all things being equal. We crossed over this HVL 123. Now, I had mentioned in the room, I might have mentioned it on the call on Tuesday, that when we were down here in the toilet, 123 calls for Feb 14th were being bought. Bought some. I followed the open interest. I followed the volume. And wouldn't you know it, here they are on the HVL level. Wouldn't you know it, here they are, their ITM. So I'm going to look to see if the Feb 14th 123 calls roll. They also bought 124 calls for Feb '07, which is tomorrow. I also bought those and sold them. So not sure what's going to be going on there. So just kind of throwing that in anecdotally. Qualcomm got reported good earnings, or they liked it, but then I'm not sure what this was all about. The the pop and drop after hours, but I digress. Let me get back to the factory work here. Amazon, Apple, Google. Oh, let's look at Tesla, the other mag name of interest. Tesla's heading near this put level where we should see some kind of supportive action. Be- If you're a Tesla bull or just for general market strength, we'd like to see this hold and kind of head back up toward, the 75-85 level. I like to look at the semis. So let's start off with SMH. Oh, let me look here. It is. And so this 240, 250 area has kind of been, if you just kind of go out in time, if we could kind of change the time frame a little bit. This has been for the last month or whatever it is, we've been in this zone. On the bad days when the market's scared, we kind of undercut the 240 to 235 a little bit. When the market's excited, we go to 250 or above, and then we kind of come back down. And so the semis are heading to the top of the recent range. Nvidia obviously is a large weight in that. So, but this doesn't move as extreme as Nvidia does. And I find this a fun trading vehicle, just FYI. And there tends to be dispersion within this index. So some go up, some go down. So Nvidia might go down, but some other constituents tend to go up or not go down as much, which makes for an interesting trade if you get a feel for how the index moves. AMD kind of buried in puts when you look at the chain. Going to have a hard time getting through these levels. I think when I was just poking around the chain yesterday, it kind of really needs Bev OPEX and even March OPEX to clear out to be able to kind of get moving. Absent people closing their ATM puts or their near the money puts, and some bullish speculation, some calls to come in, some call delta to come in to kind of override the put delta. Okay, let's see what else we have. AMD Micron was doing well yesterday, and we're going to look at a few of the other indices. Let me just talk about Micron while we're here. I guess I don't know the exact macro narrative. It doesn't matter to me really. Um, Micron seemed to be doing well, I guess, on data center, you know, semi-commoditized chips that they sell. So it's kind of been in this range. It's been a long time since it saw 100. And I kind of I have some puts sold down here below near 80 or 85. I would take assignment at 85, FYI. Mm. So that's Micron. Let's go back to the indices, which might have some broader appeal for people. IWM is threatening to break out. A lot of call open interest here. My assumption is that these are long calls up here, so we could possibly get a convex move through this and maybe have it finally get moving. However, I think it needs non-farm payrolls tomorrow to sort of confirm the narrative. You know, if non-farm payrolls come in and the macro bro algo trade decides that it's not going to be good for Fed or rates, then this thing goes back into its recent range. I know we have some moving averages, some MAs near 224 and 222, kind of where we've been bottoming out and kind of retracing. So that's another level. I've got some bullish exposure here that I'm a front runner that I kind of put on, a while back. I think they're April and June long condors, not long iron condors, long condors. So long, whatever it is, 230, 245 put spread, short 250, 260 put spread on top of it. Kind of like a broker wing fly, only moving the short leg up a little bit to give me some room and to get help with theta. Hope I'm not talking too Greeky for you guys. Um, Meta, Facebook is a beast. I've got no opinion on this. I don't tend to trade these kind of breakout momentum kind of calls. As long as I keep buying calls, this keeps going up. Clearly 700 or 675 is now our inflection level. Where was this the earnings? I'm guessing I'm not sure where the earnings were. Oh, here's the earnings. So here's the earnings. And so it was a 675-ish breakout area. And then we have this range here. Let's look at the Qs. Disclaimer, my presentations are probably going to be jumpy like this rather than very structured. Maybe one day I'll give a more structured presentation. I'm just kind of following my stream of thought here. Um, Q's 525 was a level we spoke about yesterday in the room and on the open mic call in Discord. And those calls went ITM. And now, again, we're getting that hedging in the direction of the move. I'm not sure what, I guess just put open interest here and we'll kind of in a minute switch to the website and see what's going on there. 230, 530, the round number is kind of the next clear target. So we have calls up there, and that would be where we would head should we be bullish. I just think with non-farm payrolls coming up Friday, that's hard for me to imagine a new all-time high ahead of that. And we're not that far away from the all-time highs. 6,100 is a big round number magnet. Um, Hard for me to think that we close up there. I mean, we could. Obviously, it depends on the action of the day. We'll see. We'll see. IGV, another name I like to look at. That's the software ETF. Interestingly, last time I looked, CRM was a very large weight. Salesforce, Microsoft, not as large as I would imagine. But as the hardware narrative receded somewhat with DeepSeek. Oh, what was that, last week? Whenever that was. Um, the software narrative as the AI play gained legs, gained steam. And so we got this software move, and now it looks like the rotation is going back into the hardware narrative somewhat, and maybe the software narrative is cooling off. Once again, five, follow the open interest. This one doesn't get a lot of action, but I forgot I have it in my notes somewhere. There was a bunch of calls going in for March. I think they might have been the 106s when we were down here. And an index like this doesn't have enough options open interest to move this big index loaded with these heavyweights. So it's kind of a reflection of where people may be hedging their overall software exposure, or as a broad idea of where market participants are targeting where we might go. But it's also fun to trade. It's also fun to trade. Let's take a peek at some of the constituents. Adobe, after getting beat up on last earnings, I thought I had it here. Can't seem to get out of its own way. It's kind of stopping in here. Hey Matt, now what you call it? ARM had decent earnings, pulled back on the earnings. I guess kind of ran up before the earnings. And so AMAT, which is in roughly the same business, has been. And when is earnings coming up? Earnings are coming up next week. And I know that my style is when we were beat up. That when we were beat up, I bought arm calls heading into earnings, sold them before earnings, anticipating the volatility rush, the IV increase as we head into earnings. So I might look for a call debit spread into earnings, looking for that IV rush. But I'd like to get it if AMAT pulls back. I'd like to get it if AMAT pulls back. A few other indices I like to look at. I like to look at XLF, see what the financials are doing. I mentioned this a gazillion times when we were down in the low to in the like 47, 48-ish area. Lots of volumes came in, like lots in the XLF 50 calls, different tenors. I'm a follower. I followed it. I mean, I'm a follower when it makes sense. And those are performing nicely, obviously. I'm not sure where the next level up is. This thing doesn't move 5% in a day like Nvidia does. And so it's kind of a more grindy thing. Interest rate narrative, deregulation narrative. A lot of gurus are calling for banks to do well. So it's something that one might want to consider getting into opportunistically, upping your allocation to it if you're that kind of trader, or scalping it if you're that kind of person. Not investment advice, just thinking out loud. Let's see, XLE. To me, this is in no man's land. I haven't seen a trade set up that like that XLE in a while. Been getting kind of Exxon and Chevron have been kind of getting mixed results, and those obviously have a large weight in this. And there's a lot of crosswinds with oil deregul, with like Trump with the deregulation, whatever the proper word, drill baby drill versus sanctions versus oil coming back on stream from American producers or more drilling versus sanctions versus peace with Russia and the Ukraine, and maybe they have to give concessions. So there's a lot of crosswinds here, and in my mind, it's reflected here. USO oil prices have just kind of been choppy. I forgot what this spike was about in earlier in the year, and now we're just kind of settling, but back in the trading range that we've been in. Let's take a look at VIX. Surprised to see VIX below 16 going into non-farm payrolls. Now, yes, we know that VIX is roughly the 30-day tenor, so this VIX is reflecting the March options pricing broadly. So this isn't a good picture of the market assessment of risk, but it's better than a kick in the teeth. And seeing VIX down near 16 into March when we're near all-time highs, I don't know, seems kind of, well, 16, 1% move a day. So it's not tame, it's 50-point moves in a day, 60-point moves in a day. But, I'm saying it's kind of near a floor. Maybe 14 might be a floor, 14.5, but it seems kind of where that's going to be going. I would expect, we have that inflection point, and then we're going to look at the VIX chain at 17 is the big inflection point to the upside, and then there's little ones that belong. But let's take a look at the VIX 9-day. The VIX 9-day is after all these event risks comes out of the table. 14.86, very complacent or very calm. It looks like we're kind of in a normal contango just for fun. The VIX 1-day, which is a crappy metric. I don't really know anybody that uses it, and I don't really see anything useful there. So that's the end of that. VVIX vol has come down. So demand for VIX calls, broadly speaking, has come down, or demand for VIX puts, not necessarily call demand. Okay, I've gone down enough rabbit holes here. Let me see if there's any comments in the chat. I have been watching the chat.
No questions so far.
No
Doc.
questions so far. Okay. I'll take a quick look at a few things and then call it we'll call it a day. Let's take a quick look at VIX. And for VIX, a good thing to look at on the dashboard, we have different tools. And so the delta exposure, just a quick way of seeing what market makers have to hedge. And so these VIX puts are ITM. And so as we stay below 17 and now below 16, market makers are broadly selling VIX futures, keeping it muted. So these are your over 17 is your main inflection level. If we get over there, then they start buying back the short futures or buying VIX futures, which puts us into this big void. And then we could kind of go back up. Now, remember that gamma, that as we go up, these deltas are all going to change. These call deltas are going to get higher. Yeah, as we go up, these will go closer to the money, and these deltas will go higher. The gap will increase, and so then the hedging will have to go in that direction. Yeah, to get a better view of that, if we look at the gamma, you see the picture is a little different, but basically the same. We have this void here, so this is kind of the first. We kind of tend to drift into voids if we break levels. So here's kind of the first void that we would look for, kind of neutral zone, parking zone, some people call it. And if we can get over 17, which the bulls don't want to see, um, then we get into this void and then up we go. Uh, unless anybody has any questions, I think I'll stop here and look for SMCI. I meant to mention that earlier, but I didn't. So let's take a quick look here. I know they had an announcement that's like something about their building, whatever it is they build using Blackwell, NVIDIA stuff. And that got some bullish action into this name. I think they have earnings coming up. I'm already in a trade in this name. Short 26 puts, long 35 or 40 calls times one, short 55 calls times two, something like that. Um, Another fun name to trade. Let's take a look at the swing model. And so you could think of it, and I might sometimes look at this and think of it this way, lower band. Am I willing to sell puts there, saying it's not going there and or take assignment and buy calls heading toward the risk trigger and sell something above them? That's one way I might kind of construct a trade. So I'm just kind of spitballing here, showing how I might use gamma levels in conjunction with traditional chart TA and open interest in delta to construct a trade. IBIT. I caught IBIT. That's another one I like to trade. You guys got me going in rabbit hole country. And actually, for IBIT, before we do that, let's take a peek over here and look at it today. Oh, I didn't look at it today. What was the question about IBIT? How do you see IBIT? On Feb 14th, core resistance was 52, port support had high vol index 56, exchange negative. Okay, so on Feb 14th, okay, so now I have to go into the dashboard. But before we even do that, we see the picture shifted, at least for the whole complex. And I didn't take a look at Feb 14th, but I'm just going to guess that the monthly, the Fed MOPEX, the 21st, is going to be where larger open interest, larger bets are, and that's going to have more weight versus the gamma of the shorter term. Closer to expiration, the stronger the gamma, but that's got to be weighed by the sheer delta gamma exposure of larger open interest. So it's kind of a balancing act. That said, we're over this, was it 55, 56 level? And my target, both on TA and based on these gamma levels, would be, possibly a run into here, into 58. Now let me take a look at the dashboard here and see what we got going on. Before I look at the matrix, let's just look at the overall DEX. And as you could see, it's bulled up. Net delta exposure. We're kind of right at these calls. And remember, we have to think of what this model doesn't know. You got to take resistance support with a grain of salt. This model doesn't know what you're thinking or what we're thinking. So this is calls are here. So I think it's safe to assume that customers are long calls. And so this ends up being a headwind. If we can get through these calls, then we start going up. Now, if customers sell the calls, we go down. And so 58 is clearly the next level, heading towards 60, where we've been stalling out. Of course, should this breaks. Now, also, Bitcoin trades funny because it trades sometimes like like a almost like a gold proxy, kind of like gold for millennials, like a dollar safe haven, non-correlated asset, but sometimes it is a correlated asset with risk. So it's got its own way of trading that's kind of, different than traditional assets. Hope that answered the question. And now I'm going to go set up my trades for the day.
All
Thanks a
right.
lot, Fabio.
Thank you,
Back to
guys.
you.
Thank you. And if you guys want to access the same tool Doc is using, check us out on mentorq.com. And if you have any questions, please let us know. Also, we have a lot of live sessions available for you on YouTube this week and next week. So stay tuned. We're going to be back with Doc next Tuesday. So a lot of things going on next week. But thank you guys and see you guys later. Have a good day, Doc.